Good evening to all of you. Welcome you to today's webinar. Today the discussion is on how to take profit and also how to initiate trades, because for most of them I think initiation of the trade itself may be a little easier, but taking the profit is the most difficult portion. That they do not know where to take profits, and sometimes they make a premature exit. So we have to clearly know that where to take profit. So that's very important there. And also we should know how even to initiate the trade, because in some cases, the market is continuously rallying. So without patience, you may start to get into the market, and only then you find that there is a reversal. So you must know that market always gives some sort of an opportunity on a correction. Okay. So you have to wait patiently, both for investor as well as for traders. For investors, you may have to wait patiently on a day scale, and intraday traders may have to wait on an intraday basis for some dip on an hourly basis or whichever time frame they choose. So it's very important that patience is a key in the market. But at the same time, whenever the markets are turning around, you should also be impatient to take off your trade. So this is a very difficult logic to say. You have to be patient, but sometimes you have to be also impatient. Now we will use two simple concepts. One is, of course, the moving average, and another is the Fibonacci ratios. And probably a combination of that will also be helpful to identify first the trade. First of all, whenever you identify a trade, normally anybody would like to go for a sell very closer to the top or a buy very closer to the bottom. So what we should do is that we should identify what is the trend in the market, and within that counter trend, that is, if the asset price is down, then in that case on a pullback you should be looking towards some sell, right? So what is that particular place where you should go for a sell? Similarly, if the asset price is in a bull trend, then what is the price at which probably you should get into a buy position? So these are two important things that we have to understand and do the trade. So first we will look at the concepts using moving average and Fibonacci, right? So the trend, when we say, we have already had sessions on this before. So the trend is up when it is above all the moving averages, 20, 50, 100, 200, right? So the trend is classified to be up when it is above all this. Generally on a correction, these things are very rare to come, because in a bull market situation, the asset prices dipping up to 100, 200 moving averages is generally a very low probability. It may have a dip towards closer to 20, sometimes to 50. So first thing what we should do is that we should wait for the price to drop very close to the 20 moving average in a bull market, and then start to buy very closer to the 20 moving average. So this is what is very important right now. If at all, if it goes a little bit down, then probably it can go right up to 50-day moving average, and from there it could start rallying. Now we have already had session on volume. So we should wait for the prices to decline very close to 20, and from there when it starts to move up with heavy volume, that is the time when you should go for a purchase. So the initiation of the trade, you have to wait patiently till it drops down very close to 20 moving average for position traders on a daily scale. Now for intraday traders also, you have to look at your time frame to choose. Normally I think better to look at hourly and 15 minutes, because 5 minutes and below 15 minutes generally will be a very difficult to trade because of the choppiness in the market. Particularly the stocks will be very, very choppy sometimes, and it may because after for example, even TCS or Infosys, after the results come, the trend may halt, and there could be a lot of choppiness even in the best of the stocks. But sometimes, like if you look at Tata Motors now, it is on a huge rally, right? And so those stocks which are in a huge rally, for some positive news, after a huge rally, it may correct itself back to the 20 moving average. Around that level, look for a buy. And then the target also is that you don't need to put in a target saying that probably let us say Tata Motors goes to 250, I will exit, or Nifty goes to 14,500, I will exit. So those things you should not keep in mind. There are targets which can be set with the help of Fibonacci ratios or the trend line, but the best thing is the profit target should be taken based on some quantitative, tested quantitative methods. The one area that you can, the one point that you can consider is if it starts to go less than last 3 days low. Some people keep it as 2 days low, some keep it as 3 days low, right? Or even 1 day low. So it all depends on how you want to look at it. So below some number of days low, it could be 1 day low, it could be 2 days low, it could be 3 days low. So I leave it to you to decide about it. Normally if it starts to go below, particularly I would say on the close basis, if it's below the previous day low, if on a close basis if it is below the previous day low, then generally you can say that probably for the time being a top has been made. A top has been made. So you can wait for that particular low, that is the cutting of 1 day low, as a area where you can take profit. Sometimes the 1 day low can be easily made, so people generally traders go for 2 days or 3 days low. So this is one way of taking profit. Second way of taking profit is you wait for the trend to be broken. How do you usually look for the trend to be broken? Now we have already had the trend definition like this, right? So you have a lower top, lower bottom, or a lower top at least. If that be the case, then you cut off the trade. Okay, you take the profit. So you can identify like this, that is a lower top, lower bottom, or at least one lower top, even if the lower bottom has not been made. In that particular case, you look for exiting the trade. So this is another way of taking profit target. The third methodology of taking profit target is, I told you that moving average, let us say the prices is like this. So moving average, 20-day moving average is coming like this, let us say. So wait for the price to drop below the 20 moving average. Wait for the price to drop below, because up to 20 moving average or very close or below 20 moving average. Wait for the price to drop. Then in that case, let us say the price goes up. How do you say the price goes up? Let us say this is the 1 day low, 1 day bar, high low. Next day or some days, it goes above this day, this low. Let us say there is a low which is marked, a pivot low has been done. So pivot low we have already defined before. So let us say the pivot point is there in place. Now, in this place, you put in a stop loss. That is, if it starts again to go below this particular low, then in that case, you put in your trailing stop loss. So that means you are waiting for the trend to actually get broken, uptrend to get broken. So the first place where the uptrend will get broken is take the last 20 days average and wait for the price to drop below the 20 moving average or closer to 20 moving average. Allow a pivot low to be formed in an uptrend market. Once the pivot low is cut, then you put in a stop loss. This is another way of doing a trailing stop loss. You can do that. So down trade, this opposite thing will happen. So this will be the area where to take profit target. Similarly, when I told you where to initiate a trade, I said wait for the price to drop very close to the 20 moving average, so that you will have the market cooling off, or the asset price is cooling off from a very important overbought condition. Allow it to drop, prices to cool very close to the 20 moving average. And like this, when it comes closer or below the 20 moving average, when a pivot low is formed, then in that case you go for a buy, so that you will be very closer to the bottom, because this is going to be the stop loss. In case if you are initiating the trade here, if you have initiated a trade before, this becomes the area where you are going to put in the profit target. So this is the area where you are going to put in your stop loss, right? So here enter the trade here. So you will have a very small stop loss, and if the price is going to rally, it can just take off the previous high and keep going up, and you will have a super profit. This is what we are trying to explain through the charts today. That is, with the help of bar chart to take profit target, or with the help of 20 moving average. both the profit target as well as the initiation of a trade near the bottom, very close to the bottom, or on the reverse side if you look at it, where to go for a short. So this we are going to look at it both for a day trader as well as for a intraday trader as well as for a position trader. The second thing is that what we are talking about is Fibonacci ratios. Now generally Fibonacci ratios So Fibonacci ratios are very important, and we have already expressed this before. So 23.5%, 38.6%, then 50% is not Fibonacci but generally used, 61.8%, and 76.5%. So out of this is a very important thing. So you look for a price to hold to this 38.6%. If it starts to drop below this 38.6%, okay, then in that case you make an exit. Okay, so from an important low to a top. Now that low to top, which your top at least because in a rising market the nearest top that is formed is very well known. So what is the low that you are going to take will depend on what is your comfort as far as the stop loss is concerned. So generally you take it from some important weekly low or important daily low, you can take it. Okay, so based on that you can put in your stop losses. Now, let us say, just as an illustration, in the case of a Nifty, you are long. Let us say the last low, important low which was made is 31,150, and the market after 31,150 has not made any pivot low at all. Straight rallies has come, and it is now closer to 14,600, right? So, this is 1,450 points. Okay, 1,450 points. On this, if you put a 0.386%, okay, this is going to be a very big number, right? So this is going to be upward of 500 to 600 points, right? So 23.5% also is going to be a very high number, 1,450 into 0.235. Even that is around 340 points. 340 points. So 14,600 minus 340, so 14,250, 14,260. Can be the first important stop loss as far as this particular Nifty is concerned. Unfortunately, that is from where we are coming, because the market rally has been such that we are not getting any other better stop losses, and any other stop loss means probably it can just come down and go up significantly, right? So this is the place where probably the first stop loss itself that comes based on the last important low of 31,150 and the present high, which is right now, which is today's high. Okay, so this is the way normally you look towards a trailing stop loss. But at the same time, you can also look at, as I told you, you can look at the last 3 days low like that. So Nifty, this is Reliance, so I'll just explain to you. So now we will go to the chart and see all these concepts, both the Fibonacci, the moving average, the 2 days, 3 days low, all those things we will look at it. See now, see today, today's high, it has cut yesterday's high, right? So some traders normally put this day will be a stop loss, right? So this low is 14,383. So the first stop loss that normally is coming, because today's high, today high has cut yesterday's high. So because it has cut yesterday's high, so yesterday's low can be a stop loss. So if it has, now that we can see here also, if it has cut yesterday's high here, see for example, in this case, you would have put in a stop loss here, because in this high, it has cut the previous day high, so you will put a stop loss here. So similarly, in all these positions, if you look at it, I think it has been generally an uptrend without cutting the previous day high. That is, if this in this day, this high has been cut, this particular day has been cut, so this becomes a stop loss. So this has been going on very, very steadily and smoothly without any interruption. So now you can put in a 3-day, 2-day stop loss is this, single day stop loss is this, 3-day stop loss is this, as on today. But tomorrow, if the price is okay, then this stop loss will become up to this place. So you can keep moving your stop losses if a new high is formed. See, today's high is this 14,589 or so. So if 14,589 is crossed, then you can put today's low as a stop loss. This is 14,435 as a stop loss. 14,435 as a stop loss for the up move, so that no, you are not found wanting while taking the profits. But nevertheless, please remember that we are in a bull trade and we are substantially much higher than the 20 moving average. So it needs some sort of a cooling which can always take place up to this place. Now as things stand, there can always a possibility of a correction which can happen closer to the 14,000, 13,930 and 940 levels is a possibility. So always a possible correction up to 13,900. Now because the 20 moving average is coming there, so on a close basis, the 13,900 is a possibility that is there. Now, I told you can use the moving average also. See, look at this moving average. This is 20 moving average, right? So on this day when the fall took place, it came up to this particular level. On that day, then it started to take support and start moving up. So if you look at the 20 moving average itself on a daily basis, see, look here from this particular place, there has been only on this particular case there was a dip where the market went up substantially and then came down. Here if you look at it, this came to 20 and then 50 moving. I didn't go below the 50. Now, only in September did it go below the 50. So here also if you look at it, it came down 20 and 50. 50 it took support and going below 50. Ever since the market started to rally in the post this one pandemic situation, after it crossed the 50 moving average, after it started to cross 50 moving average, there has been only one time in this entire period of 6 months that it came once below the 50 moving average. So 50 moving average is a very, very strong support, but most of the times if you look at it, there's normal correction came only up to 20 moving average. They see from here to this place, from here to here, from here to here, from here to here first initially, then only it cut this place. Here also from here, but 50 and 20 are very close to that. It's okay. Then here also 20. So 20 moving average is the place where the first investment at least can be made, and that is around 13,920. So those who are traders who are who want to re-enter the market, please wait for a correction at least closer to the 20 moving average. Now we will look at the same intraday chart here, and from the intraday chart we will then look at how to do intraday trades. Now, see, this is 20 moving average and hourly chart, right? Hourly chart. Now look at this, it just comes closer to the 50 hourly chart and then starts to move up. So a nominal correction right now, see on this particular day, it went down from 14,341 to 14,053, right? So I think this is 14,240. So there will be 200 points of correction. Normally these days, only first thing that comes is around 200 points of correction. So right now, if the trade is if there is some fall, then probably we will get some support very closer to this place, which is 14,300 levels, 14,293, 14,300. So this is the based on what's happening in the past, we have to make our own conclusion. That is the heart of trading. Now here, if you look at it, on an hourly chart, it says that a potential fall of 200 to 300 points, the market can get bought. The market can get bought. Okay, so keep an eye on the 14,300 levels for the market to resume again the uptrend if there is a fall. The deeper thing should take it down up to 13,900, 920. That is coming on the daily chart as far as daily chart is concerned. Right now, it may just stop here itself. Now, when I told you that even on intraday, that no, just wait for the market to fall very closer or slightly below the 20 moving average, allow a pivot low to be formed and then go on the long side. Let us say on intraday trade, this particular day, let us say it came down below 20 and just touched 50. Okay. Now, after it touches this, allow a pivot low to be formed. That means this is a pivot low. This is a pivot low because the next hour low is better than this. That is, it is higher low. This low, where I am keeping it, is higher than the previous hour low. So that means this has formed a pivot low. So keeping this particular low as a stop loss, you can go for the long. So when I mean to say that next day, you can go long. You can go long at 14,130 levels, 14,130 levels, keeping 14,040 as a stop loss, 14,040 as a stop loss. So 100 points only. For 100 points, then you have just got a big up move. So the traders should look at like this, that in any time frame where they are trading, allow the price to drop down either to 20 or 50 moving average, allow a pivot low to be formed, and then once the pivot low is formed, go long, initiate the trade, you will have a very high chance of success. Now let us look at this itself in a 15 minutes, Nifty itself in a 15 minutes chart. Then we will go to some other assets, particularly we will look at Reliance on a daily basis. We will also look at the gold chart also. Okay. So now we will look at this in a 15 minutes chart time frame. Okay. Now look at this particular chart. I will also look at the stop loss profit target areas also. So look at a pivot formation very closer after it just drops down to 20 and 50 moving average. Okay. So now let us say this particular time frame, this particular thing, it has dropped below 20 and 50. Now next 15 minutes it has gone, a pivot low has been formed, right? So once the pivot low is formed, we should always try to go long above this particular 15 minutes high, okay, or at this place itself put a stop loss, whichever way you decide. If you are waiting for this particular high to be cut, that did not happen, it would have saved you something, right? But if you have gone long because the pivot low has been formed already, then in that case this would have been a stop loss. On a 15-minute chart, probably you would have gone long at 14,190 and stop loss was 14,160 or so, a small stop loss of 30 points, a small stop loss of 30 points. So you just decide to go long here, you would have got it. Now the second thing that I told you is that no, you allow in any time frame you allow important high or there is a lower low, lower top formation to happen, then exit your trade. Now if you look at this particular, once it started to break above some high, now you just see even in a 15-minute chart, no, this is a low, okay, so this was not broken, and after that the market started to rally, so you could have kept this low as a stop loss. Then it started to move up, then even this particular low has not been broken, okay, then it has gone up. So here it has continued to go up without any correction also. So here if you look at it, the same thing here in this particular chart, this particular low would have been the stop loss. See, because here it went up, so this was the low, so this low could have been a stop loss, so maybe that got triggered. But after that, when it started to move up, then you would have gone long above this particular high and you would have kept this low as a stop loss. Then it started to move up, then the lower top formation, this is the lower low and this is the lower low, lower top. So once it starts to break this, then you would have removed your position. So you can think about going doing a trade like this also. But in the case of 15-minute chart and all, even in the case of Nifty, you will have too many trades. So better you look at the hourly chart and keep your trend intact, trend intact, because if you see ever since it started to move about the 13,150, there has been generally not many occasions where probably, or there's been only one or two occasions when you saw a lower top, this one. See, for example, this place and then this place. This place. So there have been two places where probably it has cut. But generally speaking, right now it looks that Nifty correction is just stops even below above the previous day high. So the ideal place where probably you can look for some stop loss is at least a 200 points trade from the previous high. So if you look at it from any particular this one here, there has been a 200 points here. You look at the 200 points fall, and here also after the market fell, for example, it fell down to 13,150, and it just moved right up to 13,450. Like so, there was a 300 points rise. So only once it starts to rise above that the minimum point of 200, 300 points, then only the entire thing comes. That is the trend change comes at least on a briefly, at least briefly. So look at something like just keep some 200 point stop loss as a trailing stop loss in case of Nifty. Or second thing, as I told you, keep some important high low. But the problem is that the important high low is very, very far off. Important support resistance are very far off. In that particular case, just keep last 1 day low or last 2 days low, like that. Now last 1 day low that has come today, let us say this is the low, right? So today's low is this, that is 14,436. So just keep that 14,436 at least as the place where probably you should exit your long position. Now, because even cutting the previous day low or the same day low is not happening. So here in this particular day also, only when this is cut, that is for 13,673, and this also came 13,658 or so. Only when it cut, it just broke completely from that page. So let us say, if based on that, I think the trailing stop loss right now for Nifty is today's low. Today's low is 14,435, 436. So keep 14,435, 436 is the low, because at least that will give a feeling that a temporary top already at least is in place. If there is a 14,436 is cut, then in that case it can go down possibly even to this 20 moving average, which comes closer to 13,930, 935 levels, right? So you can trade it like that. Keep a trading stop loss below 1 day low. Or for some, if they want to keep 2 days low or 3 days low, it is fine. Now we will look at the same thing in the case of Reliance and gold chart. Now Reliance Industries is generally in a very consolidative mode right now. So for those who are in the position trading also, this looks to be a very choppy trade. So you can look at this from now. Here there are too many highs and lows that have been broken, which gives a very very unhealthy feeling of how to do the trade, right? So now Reliance Industries, in that case, if it just confuses you as far as position trading on a daily chart, look at it from the weekly chart basis, because at least it will give you a slightly better picture of where to go for a long. Now, so the weekly chart, we see higher, this low has been broken. So I think no, it is on a general downtrend. So once there was a correction, uptrend correction. So once this low is broken, then you go for a sell again, keeping this particular as a stop loss. Then again there was some sort of a correction. So once this low is broken, then you keep this thing as a stop loss. So right now I think no, this is the place where 2038. So 2038 is a place where probably is something to be watched. If there is a push above 2038, I think the trend will change for Reliance Industries. So today, generally the trend has been generally better. And if you look at a daily basis, if you have been short on a daily basis, then in that case today is a day where you should have exited your trade. You should have exited your trade, because one is, you see a big candle and very high volume, big candle and high volume, and it has also broken about the yesterday's high. So which means this is a clear case where probably you should look towards going the short side. Now, for those who are doing the intraday trading, the interesting aspect is whenever it goes very closer to the previous day high. Now, for example, the particular day, it went up very closer to the previous day high, right? So what you do is that you just, in that case, you look towards going short. You look towards going short and keeping this particular high as a stop loss. Now today, see, this day was a good day. Next day, what happened is that it just opened at slightly higher level and immediately started to fall below the previous day low. So what you could have done is that even on an intraday basis, you could have gone short below this particular low, this day's low, and keep that particular high as a stop loss. That is one trade you could have done. Second thing, let us say on any particular day, see here this particular thing is good for explanation. So this day low has been broken. Since this day low has been broken, next day you expect that the Reliance Industries not to immediately break this particular high. So what you do is that you go for a short, keeping this particular low as a stop loss. Now, if you see, most of the time, this is all these spikes do come, but no, it doesn't. In this entire number of days, if you look at it, ever since this low was broken, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 days. 10 days, if you look at it, it is not breaking above the previous day high. The previous day high. Only today it has broken the previous day high, right? So, in those particular time, then in that case, you always look towards exiting towards shorting Reliance in a sustainable manner. Only today, since it has broken above this, till such time it again breaks below a particular day's low, you just be either neutral or probably you can be long. You can be long. So that is the trade that you can look towards doing that as far as Reliance is concerned. And as I told you, now let us say, just wait for the market to go above the 20 moving average. So this is for position trader, right? So what you do is that now even on a daily basis, on a weekly basis also, the trend is down. So what you do is that you are waiting for a pullback. After a pullback which comes above the 20 moving average, look towards a short which is below a particular day's low. So let us say now this particular day low. So once this has been broken, it has not broken above this particular high. Once this low has been broken, it has not broken below this, right? So in a counter trend, it will always give you a feeling. Now, in the case of a 20 moving average, wait now, there has to be a proper close above the 20 moving average. So here, again, there is a pullback which is taking place to this level, right? So now, again, look towards going short below this particular low. Okay, try to go short below this particular low and keep this I as a stop loss. So that has not been broken. Now, again, I came down below 20 and went above 20 moving average. Now, again, you go for a short below this particular low, and then you keep this I as a stop loss. That has not been broken. So right now, we should not expect if it breaks about 2018. If it breaks about 2018 itself, I think Reliance will start to be on the upside. Reliance will start to move on the upside. Then in that case, it becomes a stock to buy and dip. So this is the planning that you have to do for Reliance. Till 2018 is not broken, Reliance can be on the downscale again, and in that case you should look towards going short below a particular day's low and keep that day high as a stop loss. And for that to happen, for a decent thing, it should, that particular day's low which you are doing it should come slightly closer to the 20 moving average, slightly above the 20. Now it is closer to that. Let us say next day it moves up a little bit further from there, and then it starts to break that particular day's low. Then you can go short, keep that particular thing as a stop loss. Now, similarly, if you look at the that is after, if it breaks to 2018, then it will become a stock which is to be bought on dips, and every time it comes closer to 20 moving average and breaks a particular day's high, that's the time when you should go towards a long position as far as Reliance is concerned. So this is how you normally put in your trade, using the technical parameters and looking towards the overbought, oversold conditions, and also looking at some decent volumes. So today we have explained right now till now that what should be your area of a, now suppose let us say in Reliance for some days, for some weeks, you have been on the short side. What is the place that you should put your trailing stop loss above this particular high, which is 2018? That is one. That's a big trend change. The second thing is that if you want to be slightly very closer to the bottom, then yesterday's high which was cut, 1939. So 1939 is the area where you should have exited your trade and wait for the market to again go up a little bit before you again put in the trade. So this is how you normally adopt and do a trade which is very closer to intraday trading. It can be tuned for intraday, this one, or you can do some position trading with the help of this, and also instead of big margin, you can look towards a call option or a put option depending on which side the trend is. So now we will look at one or two more. We will look at gold, particularly the international gold. Let us see where it is other than the Indian gold. So now the we can say the trend right now looks to be, I would say it is definitely below the 20 and 50 moving averages. Since it is below the 20 and 50 moving averages, I think you should now look towards going short in case if it breaks below any particular day's low. So this is the trend. Right now this is the trend, right? So the trend clearly shows that it is down because it is below 20 and 50 moving averages. So as a concept, what you will do, you will try to go short below any particular day's low. Now, of course, it would have been worthwhile if it has moved slightly above the 1884, 1885 levels. Maybe you can wait for the 1884, 85 levels also. If it comes, then starts moving lower, then it will be it will be better, because then probably it will have eased the oversold condition, because from 1960 it fell here. But right now, because of the type of candlestick pattern that it formed yesterday, it looks as if a possible pullback is there. Possible pullback is possible up to 1884 or 1885 levels. But it is better that you can look towards getting out of the position of any long position if you have for some time below the 1840, 1841, and create a new short position below 1841. That is for trading position, not for investment. We are not talking about investment. So right now it's going at 1843, 1842, 1845, and today's low is 1841. And so this, what we are suggesting, is for tomorrow's trade. Just wait for today's low to be made. And once today's low is made, if it starts to cut below yesterday's low, that is today's low tomorrow, then in that case it becomes a short position with today's high as a stop loss. So this is basically how you look towards the intraday trade. So now gold is definitely on the downside, and since it's on the downside, you look towards the probably look towards intraday chart on the shorter side of the market. Now here if you see the trades have gone right up to the 20 and 50 moving averages, and now it has started to pull back. So now you can definitely know, because you have now sensed that the market is generally on the downside because of the price action that we see, because it is below the 20 and 50 moving averages in the daily chart. So here you should now look towards, since the market, since it just went up to 20 and 50 and slightly above 2050, and it has started to come below the 20 and 50 in the 1 hour average, then in that case this is now on intraday. This is a short position, keeping today's high as a stop loss. Right now it is in a short for intraday, keeping 1863 here. Now it is around 1840. So any pullback, any small pullback here, should be considered for a short position, keeping the high of 1863 as a stop loss for today itself. Why? How was it traded? How was it considered? It is because on a daily chart it is below 20 and 50, so the trend is down. Now in an hourly chart, we waited for some pullback to come, a decent pullback to come, which has taken it above the 50 moving average in an hourly chart. Now once it then falls below the 20 and 50, then you have both the daily chart on the downside and hourly chart also. Now you have got it on the downside because of this. So what you do is that you now go for a short, keeping this particular high that you got right now as a stop loss. That's all. Very, very simple as far as intraday is concerned. Just keep this particular place as a stop loss, and probably you can just wait for some pullback. 1840 there, it can just wait for a pullback there before you go for a short. Let us look at the same thing as far as the this Indian gold mini futures is concerned. So gold mini futures, same thing like this. Here it did not even go up to the 50 moving average. So it went up the 20 and now it has dropped below the 20, right? So since it has dropped below the 20 right now, either you can, assuming that the overall top has been made, just wait for pullback and then short, keeping the high of today as a stop loss. Or second aspect is just wait for a pivot formation to happen. Just wait for a pivot formation to happen. When I say pivot formation, something like this. Something like this. Wait for a pivot formation to happen. And after that, if it starts to go below that particular low, then go for a short. So right now, there are two alternatives. One is that you can straight away short, keeping 49,600 as a stop loss. It is now at 49,055. Maybe it just pulls back to 49,300 or 350. Then in that case, you go for a short, keep today's high of 49,600 as a stop loss. That's all, very simple. That you just need to practice this. That's all. Then because see, anyway, when you do a trade, all possibilities of a loss and profit will come. But how do you make it simple? Now the simple thing is that you just identify a trend. 2050 down daily basis, hourly went up, then came down. Why are you waiting for a thing to push up to 20 and 50 and above that? It's basically to ensure that the oversold or overbought conditions get eased out. So wait for that pullback to happen, and once that pullback has taken place, for a position trader, go for a short below the previous day low or that particular day's low next day. And for an intraday trader, on an hourly chart, wait for that to come back below the 20 and 50 and go for a short. So this is how the trade looks like as far as gold is concerned on the intraday chart is concerned. Now I'm not trying to explain again the Fibonacci ratio here. We could have done the same thing as far as Fibonacci ratio as far as Reliance is concerned, as far as gold is concerned. And just as a matter of illustration, let us say the same XAE gold, we'll go for that. Now our daily chart. So let's look at this is the high, which is 1901, and this is the low which came yesterday. 1901, this is 1817, right? So what is the difference? Minus 1817, it is 84 rupees, right? So on 84 rupees, let us say 0.386. Let us say whether it is clear. It is $32 from there, which means 1817 plus 32, it became 1849. So that was 38.6%. And 1849 was clear yesterday itself, and it went up to 1863, right? So that means, let us say then the next Fibonacci ratio comes into play, 1959 minus 1817. It is 142. For 142, 0.386 is $55. So $55 on 1817 is 1872, right? 1872. It did not go. So 38.6 is a very important place. And if you see, it went up to 1864 and has come. So 1870 is a possibility, but it has stagnated close to 1863. So generally, if you wait for a 1872 thing to come and then short even very closer to that, or you know that 1872 has come, and when 1872 has come, then just go short below the previous day low, or wait for it to fall below any of the 1 hour 20 and 50 moving averages and go for a short. Even now the 1872 can still come, and then probably the market can fall from there. Now the same thing of 23.5% replacement, that is 1959 minus 1817 into 0.235, right? That is $33 plus 1817, it comes to 1850. So right now it is trading below 1839. So let's look at the hourly chart to see this 1815. Okay. So now it has fallen below the 1850 mark, right? So 1850, right? So I think it went up slightly. It went up to 1863, and first initially, if you look at it, 1851. See, this was 1851. So it first resistance was there at 1851. And then once it broke, it could have gone up to 1872, but it didn't go. It went only to 1863. So right now, 1851 looks to be a good candidate to position yourself for the short. So keep 1851 in the XAU USD equivalent and go for a short, keeping this particular low as a stop loss. So the same thing which translates into Indian gold price, if you look at it. This is gold mini futures, and in the gold mini futures we look at the daily chart. So same thing, this has fallen from 51,857 to 48,578. 51,857 minus 48,578. So that is 3,279 into 0.386. That's the first thing that you should get. 1,265 plus 48,578. 49,843 is the very ideal level where if it had gone, maybe it would have entered into resistance. But 49,850, it gave it up to 49,615 and then started to come down. So the 0.235 itself seems to have acted in between 0.235 and 38.2 seems to have acted as a resistance. So there is a chance that it can go up to 38.6% and then fall from there. So that scope is still there. But for a position trader, that's what I'm saying. Position trader should go short tomorrow if you start getting below this particular day's low, right? But it is always better to wait for the market to come very, very closer to the top level. That is, it should be above the 20 and 50 moving averages for you to really decide that to go for a short position. Now, it has not come to that because it has still not eased its overall sell position. So there is a risk of retracement still. But nevertheless, those who cannot wait for it should now go for a short below the today's low. Tomorrow they should go for it. And for intraday trader, already we have said that since it has fallen below the 100 and 50 and 20 moving averages, you should look towards a short right now as far as intraday is concerned. So this is how you trade, and probably n number of examples can be given. But the overall underlying thing is, market is not difficult to analyze technically, but what it requires is really the implementation of what we have been learning and what we see in the market, and that needs a lot of amount of psychological efforts. And most important thing is that you should always keep your losses low and run your profit. So that should be the basis on which you should work, and for that you should not look towards a premature exit in the market. So because in Nifty we have seen such a big trend that of 1,400, 1,500 points happening, so why should you take a premature exit? Okay, so allow the market to rally and put in a stop loss below certain important thing, like put it below the hourly moving average of 20 and 50 in the case of Nifty. Similarly, you put it like this. So you just wait for this to happen before you do anything. So now time is 7:45. You can ask any questions. Thank you very much. So in every session we are trying to revisit some of the concepts also that we have discussed before, and try to give new ideas. Like for example today said, how do you identify the trend on a daily basis, and then once on a smaller time frame the trend is also comes down by coming down below the 20 and 50 after crosses, and in that case go for a short. Very simple thing, like how we illustrated in the case of a gold. And you can always look towards 1 day high or low, or 2 days or 3 days, whichever you want to do, as a trailing stop loss. In case if you don't find a good level of 20, 50, in the case of Nifty right now 20 and 50 moving is very far beneath. So waiting for such a deep fall is not meaningless. So you should always wait, put it below a particular day's low or so as a trailing stop loss. Remember one thing, normally normally the stop loss they just trigger for a very few minutes and then take it up. So if you want, you just take the stop loss in the form of an option in case it is affordable. So thanks very much for your participation. So enjoy your Pongal holidays in a very safe manner. Looking forward to seeing you again with a new topic next week. Thank you very much. Good night. Happy weekend.